Take a look at the markets. We are sharply higher. It is the NASDAQ that is a ripper today, up 2 1/3%. We're good for 500 points. Coming off the worst week, as we said, for that group since April. Bitcoin had a rough week. Risk came out of the market, as you know. I think the big question we all want to know, where does this leave us now? Thanksgiving approaches. Not that much time left to go in the year. I go back to what Tony Pasquarello of Goldman Sachs said last Friday pre-open. He surveyed the landscape. He looked at the volatility and said it had some elements of capitulation, but he hasn't changed his overall bullish view. Quote, it's a bull market and the primary trend remains intact, the primary uptrend. Quote, I'm a believer that liquidity is set to improve. The economy should accelerate. The story may not be as pristine as it was, but that interplay is still pretty favorable. Does that match with how you think, Josh, about where we are?
I think it's a good take. I think the number one thing that you had to get right this year was that you could have rotation within the Mag 7 and that would be enough from an index level to continue to propel us higher. And then the number two thing that you had to get right was that momentum would remain the most powerful of all the factors. And just look year to date, momentum statistically is number one, up 21% on the year. Growth is up 17%. Quality up 9.6, value up 9.5, shareholder yield up 9.5. If you had an overweight toward multiple of those factors or any one in particular, you've had a great year. Hasn't been necessarily in a straight line, but overall, that's what kept you on the right side of the market. Low vol is the worst performer of that group. Shareholder yield is the worst performer of that group. So, you do have a lot of dispersion. And I think within that Mag 7 rotation, the most interesting thing to say is it's been very difficult to not be in that trade, even if at any given time, one or two of those names have been giving you trouble. There was a moment this year, Judge, where Tesla was just like a complete disaster. Apple had a moment where everyone was giving up on it. Amazon has had some really bad post-earnings reactions. Obviously, the saga with Alphabet has just been incredible, which I know we'll get to in a second. But giving up on any one of those names and then utilizing it as a reason to get out of the Mag 7 has been disastrous for people, because that rotation from one to the next, it's been really powerful, and it's kept this market moving up.
Weiss, we shook some things out undeniably last week, okay?
Yep.
But back to what Pasquarello's saying. Do you agree? Are we still, intact? And even though we're not as pristine as we once were, that I'm using words that he used in his note, we're still pretty favorable. And if you look at the overall backdrop, you've got obviously the CapEx spend. You have a pretty good economy, which is going to, many think accelerate into next year. And you got the Fed, which is going to be more engaged, obviously, on the cutting cycle. What do you think?
Yeah, no, I think we are intact. I can't tell what the market's going to do depending upon what the Fed does. That's a short-term consideration. Overall, we do see the economy strengthening in some parts. Let's keep in mind we still can see the consumer weakening.
Yeah.
So it's a two-part economy. Now, you've got the largest spending that continues to be intact and driving the economy. So I think we're good. And I also think, and this is a term I really dislike, I think it's healthy to shake out the latecomers to the AI trade, to the tech trade. And so you can move up in a more reasonable fashion. We did get overvalued, unquestionably, but we're in good shape now. So I'd keep going, with the with the mid-cap tech. I think the AI trade is far from dead, but there's still some massive overvaluations. Most are in the private market, by the way, not in the public market.
Well, Joe, so speaking of tech, I mean, Alphabet has been the best story of the last few months in terms of this trade. Mm-hmm. It's defied a lot of expectations. It hits another record high today. It's up 11% alone since Gemini 3 launched last week. It was the only Mag 7 name positive last week. It's had a larger market cap than Microsoft for the first time in 7 years. That tells a lot. And if you need more, co-founder Larry Page, he's now the world's second richest person, passing Larry Ellison. So that's been a pretty good story, and that's one of the stocks that you own.
So I think what's happening is that we're looking at the AI trade, and we're trying to understand who is going to deliver the quickest on the ROI. And I think in the case of Alphabet, they're giving you the evidence that they might just be that stock that does it for you. Gemini 3 seems to be something that's certainly changing the story dramatically. I think in addition to that, it's the TPU chips that are obviously being utilized in the AI infrastructure. So it's the confluence of the TPU chips, Gemini 3, Google Cloud, and then you go beyond that, and you look at Android, you look at Waymo, and you look at YouTube, and you see this very diversified conglomerate that came into the year with significant questions surrounding an antitrust ruling and the fact that ChatGPT was going to cannibalize search. Now you've seen a reversal in that sentiment, a rebuilding of position. And to your point, when you look at the Mag 7, it really is only NVIDIA and Alphabet that's outperforming the S&P so far year to date. So we're seeing kind of this narrowness in the Mag 7 and the opportunities.
Becoming more, as Citi says, idiosyncratic, right? Yep. Which they think continues into the new year, in that what was a lump everybody together trade, it moved as this monolith, is not doing that anymore. Because as you look at all these companies, yes, they have the circular deals, they're reliant on one another in some respects, but they're competing against each other too.
Yeah, so I think if I could finish my thought, two things are important as you move forward. What the ROI is going to be on the AI trade, and then I also think what we've learned over the last 3 weeks is that valuations in tech do matter. And I think the market is going to be a little more judicious, saying, okay, we don't want the extreme valuation companies where somewhere down the line the dream is that they'll grow into the multiple. We want the companies here and now that have more reasonable valuations.